Hi, I'm Steve Johnson, Chief Investment Officer here at Forager Funds Management, and this is our quarterly report video series for September 2019. In my cover letter to this latest report, I talk about the growing signs of fatigue in the bubble for growth stocks. Forager's Gareth Brown has been blogging about tech-cum-office sharing company WeWork for the past 4 years and talking about its absurdly high valuations. Those valuations have done nothing but go up over the subsequent 4-year period. Yet the company tried to IPO in September and stock market investors weren't having a bar of it, even at much lower valuations. This has important ramifications for the whole ecosystem because all of those investors are relying on the stock market being the last and dumbest patsy. If it's not going to be the stock market, who's it going to be? I also talk in some detail about the risks around today's extremely low interest rate environment. We've been relatively immune here in Australia for the past decade, but in recent months our RBA has been cutting rates very aggressively. While that might feel like a free lunch for highly indebted borrowers, there are significant risks that come with deflation and a low interest rate world. Yes, it feels like interest rates are cheap, but if we go into a world where asset prices and incomes are going down, it can be very, very expensive for borrowers. In the section on our Australian fund, we talk about some welcome respite on the performance side of things, and largely where that is coming from, some success on the activism front. We've been talking about getting more active with some of our underperforming investments for a significant amount of time now, and the past quarter's shown some good progress on that front. We've seen significant board changes at MSL and Thorn Group, and we've seen a merger go through at Logicams that's showing some good signs of progress. On the friendlier activism front as well, we've seen a dividend implemented at McMahon, some board change there as well, and a very significant special dividend at National Tyre and Wheel, both things that we've been pushing hard for. On the international fund, we introduced a new stock there called Zebra Technologies. Apologies for the pronunciation, but that's how they say it over in the States. I talked at our recent roadshow at some length about the opportunities in high-quality cyclical businesses. This is companies that earn a very high return on their capital on average, but where those earnings can change quite a bit over time. There's a lot of pessimism about the global economy, and that is creating pessimism in the share prices of some of these businesses. Zebra is the perfect example and a good addition to our international portfolio. And finally, up in Hong Kong, we've added a few new investments up there as well. It's a period of extreme turmoil in that economy, and for the wider society in Hong Kong, the two businesses that we've added to the portfolio have seen plenty of turmoil before and have the balance sheets to get through it. I hope you enjoy the quarterly report, and as always, if you have any feedback, please get in touch. Thank you.